Absolutely. And I know it's only Tuesday, but it feels as if it's been a very, very long week so far. We did a lot of work over the weekend on First Republic. It's a stock we know. It's a company we know. It's the bank for Aureus Asset Management, and I know many people who work there. So, we started digging through all of the filings and all of the past transcripts and earnings, and it just felt to us that there was not that much of a comparison on the similarities between Silicon Valley or even Signature and First Republic. As Jim said, it's a mortgage bank. 4% of its deposits are related to technology and startups, not 50%. It has the highest satisfaction level of I think it's one of the best of all banks, if not one of the best of all companies in the country. And if you shrunk the entire bank so that there were no deposits over $250,000, you would still end up with a company that was worth a whole lot more than what the stock was selling at yesterday morning. So we put in an order, and luckily it came off. We bought it, and we're happy about that today. I mean, we had a position that went down significantly, of course, and we're very sorry about that. But this bank was worth a whole lot more than what it was trading for, between 19 and 30 yesterday.
All right, so we'll keep our eyes there. Stock is up 56.5%. It's a big rebound, to say the least. Master the obvious, I guess, in some respects. Kari, you bought more Schwab. Josh Brown, you told us you bought Schwab yesterday. Josh, I bring it to you. You feel like the worst is over here?
For Schwab in particular, yes. And unlike Jim, I am trying to be a hero. No, I'm just kidding. This was stupid. Listen, I'm 25 years in this game. Like, there's a reason why some people are still doing it. It's not, this type of trade does not come along all the time. If you're like very lucky, something like this happens once or twice maybe in a given year, where it's clearly the highest quality name of the bunch. It's coming down in sympathy with other names. It's got its own very different situation, but the bulk of people trading it are either like trying to play an intraday swing or don't really understand what's going on, or it's being sold as, part of like some kind of a basket. That was the situation with Schwab. There's nothing specific to Schwab where this stock should have been down 40% from its high. Now, is there going to be a problem for some of these banks, neobanks, regional banks, brokers turned banks? Is it going to be as easy to make money if, for example, the rules about contributing to FDIC change or whatever? That's like a discussion for another day. I don't think any of that would permanently impair the constituents of, for example, the regional bank ETF. And I definitely don't think that would be some sort of a game changer where you wouldn't want to be invested in a blue chip business like Schwab that has been around for 50 years and has survived much worse than the fall of Silicon Valley Bank. So this was so obvious to me. And, of course, because it worked out so quickly, which I wasn't sure it would, now the only problem is I didn't really buy enough. But what? Yeah. But whatever. Like these things don't happen very often, and you have to act when you see them.
I got you. Kari says you're still a hero.
I'll always be a hero. I know that.
I just want to mention again, I don't want to, act like I just glossed over it, but Kari bought more Schwab as well. I got some housekeeping, though, with you, Jimmy. Did you buy First Republic yesterday?
I did.
You bought it yesterday, not today.
Yeah.
So you bought it before the big rebound.
I did. However, I heard you. You said, I caught you, right? I know you. You said it's up 60%, whatever it is today. It's also down meaningfully. I mean, this was an $80 stock 2 days.
No. I just want to know. I want our viewers to know when you did it.
Yeah.
That's
okay.
All.
Got it.
All right, Joe.
Pretty good.
So you bought MasterCard.
I did.
Is that related here or indirectly, or what's the story here?
Let's walk through the thinking here a little bit. So on Friday, you're going to have a reclassification of the S&P sectors. You're going to have 14 stocks that will be reclassified. Actually, 8 of those stocks are going to come out of the technology sector. 2 of those stocks, Visa, MasterCard, they're both included in Joe T. Visa, I own personally. What will happen with Visa and MasterCard is that they will quickly jump within the financial sector to the 3rd and 4th largest holding within the sector, each having a weighting of somewhere around 7%. I already own Visa. I want to own MasterCard. Why do I want to own those? Because given what has happened in the last several days, the stress of the last several days, you would think to yourself that mutual fund managers and money managers overall will look at the financial sector and say, hey, I want exposure, but I want to diversify a little bit away from the banks. And that's exactly what these two companies with $300 billion plus in market cap are going to be able to do for you. They're going to give you diversification to move away from right now the top 10 in the financial sector for the S&P, which is littered with big banks.